Hello and welcome at Stocks Advisors channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Limelight Networks Incorporated, traded at Nasdaq, ticker name LLNW. Limelight Networks today did show a very small action. If you just magnify, it's actually classical doji, just sitting a little bit below moving average 20, the green line. By the way, we have three moving averages here. As always at our daily charts, these are green, blue and red lines correspondingly, being moving averages 20, 50 and 200. Here on the left you see their legends. With some reasonable volume traded today up to 860,000, let's say. We are still kind of in a few days decline, but is it so relevant? No. To understand what's happening here, we really need to little bit look at their, let's say, bigger timelines, bigger, let's say, time scope, time map. Let's have a look on the situation from June, July of previous year till today. And if you look here, you can clearly see what's happening. Well, overall, we are kind of descending with the stock, and these buts are very interesting because they will allow us to understand something. So there are several strong trend lines. So first of all, this is this line, which is kind of a ceiling, but also an attractor, which works every 3-4 months for the stock, and it's so-called cascading decline. Now cascading means that we have, let's say, a kind of a trading sector here. In this case, you can see already formed two sectors or two, let's say, cascades. Usually these are either volatility channels or, let's say, it could be the kind of triangles. But here you see the first one started here. Actually, let's do it with rectangular to see it better. So this is the first cascade, not really finished with the triangle, but kind of pseudo triangle formation. The second cascade started in mid of October, let's say finished by mid of February, and now you are right, we are in the third one. So let's magnify it back. So here we are now in the third cascade. So if you know how to enter, if you know how to buy here, how to trade here, you can be in a very nice situation, because we can return all the way to this line. Let's make it for us actually green, that we can see it better. So that's the line here, which works as a strong attractor. And once we are there, this is more for midterm traders. Once we are there, it could be very nice profit, especially keeping in mind that we are now sitting at 353, and this line is all the way up to, let's say, 460 at the moment. And you see, timely we go there back. So the first cascade, second and the third is forming now, and looks like it's forming as a triangle similar to the previous one, because you can clearly see here also the triangle formation at the previous cascade. Let's just look here. So this was the, let's say, the triangle formed if you draw the lines. So this was here, the top of it, and this was the bottom of it. And once it was resolved, not completely fulfilled of course, but once it was resolved, you could clearly see there is a huge jump, and then of course decline. Although it's not completely real triangle, it's kind of pseudo, because the lower line is piercing through line and topper one is all top line. So it's a little bit non-classical, but still it means that we can enter again and play the same trade, actually, to make the same way. Well, to be more precise, you could say also it was a parallel descending channel here with a break, also true. So there are two possibilities to look at it, but in general the point is that currently, let's go back to today's situation with magnification and remove this rectangular. Currently, we are again forming these volatility waves. And now in our benefit is the fact that moving average 200, the red line is on top. Also, this attractor green line is also on top, so it will work as a strong attractor. And at the moment, we are about to form magic cross up when moving average 20 will hit from the bottom moving average 50, and then the price should go higher. So with this being said, actually, the way to trade here, it would be just let's say a classical safe approach with numbers of averaging downs and just buying at those levels and hoping that we will actually rebound, either reconfirming this line or going maybe a little bit lower, but still with a reasonable profit here. So let's do the lines, let's do the levels, how we could trade. First of all, what might happen, this trend line might be confirmed and we could rebound already. If not, we might decline, but therefore we need to know how to buy. And if we do this, so first level to buy will be actually between the current volatility point and also which was formed by kind of a support by 14th of February and the current price between actually a next volatility point. So between 365 and 339 would be actually the first entry opportunity here. Let's write it down. So this will be 339 to 365. This would be our first channel to enter, and then if needed we can just rebound from there and take the profit. It's already buy actually according to the current price section, especially given that this support, pseudo support line, the dark trend line actually might be confirmed. If yes, we will immediately go up and then we can take the profit. And by the way, speaking of profit taking, as always at our channel we say take profit and 10 to 15%. Never be greedy, don't wait too long, re-enter if needed if you want, but take the profit. Profit taken is taken indeed. You have it until you press the sell button, there is no profit. So with this being said, that's the profit target, that's the first entry level. Still remembering those cascading channels that we discussed here, the price might slowly still go lower a little bit because maybe this dark line, which looks like a new formation of the new uptrend, if it's not confirmed, of course, we might decline further here. And then if this is going to happen, we need to actually wait for next level of support, which will be in this case at this level between this one and the lower one here. So it will be between 304 and 325. So we can write it here again. So between 304 and 325, and this will make it our second entry opportunity, which we can use here to enter and still to make the profit. And then if you would ask yourself what would be the third level, to understand this you need a little bit to look again at the bigger scale, because there is no general, let's say, decline further than the cascade box, because we are already at low in the channel with 304, 325. So it's not expected according to this technical trade to go lower, but we just need to take some let's say possible negative catalyst that kicks in, because if this kicks in, the cascading will be cancelled and we will decline. And if this happens, we will most probably go to all the way where we were by very dark days of COVID in previous year, also in August. And if this is going to happen, it will be just beginning of the second wave, and these would be the prices between 250 and 272. Not really expected, again a little bit higher than 272, 275, with this being actually the top line here formed, but not expected at all. You can see these are really low levels. Also, if you look through let's say the COVID lowest, April 219, but in general This is again just a risk mitigation if negative catalyst kicks in, therefore we place it here. It's not technical, not expected. So what we do here is not prediction at these levels, it's just, let's say, the risk mitigation and just taking into account this possibility for us. So to repeat again, this is 250 and 275. So let's write it down, 250 and 275. To buy again, to average down. So while others, if it happens, if negative catalyst kicks in, will be taking losses and exiting, you can just buy there and wait for your rebounds. Again, at the rebounds, buying with buying, and then at the rebounds you sell with the profit. And as always, the profit is advised to be taken at 10 to 15%. So it's this one. So at any rebounds, once you have 10 to 15%, with respect to your money allocated in the position, it is advised to sell and then re-enter if needed. If not, just check other opportunities, many videos. So in general, what is expected here, the green line, as I said, is working as a very strong attractor already several months. And even if we go there, it will be a nice opportunity to make the profit. But what might be happening at the end, this overall wave that you can see started in August 2019 could stop and you can have a bigger wave up. So this is more for mid-longer term traders. You can even wait longer to go to higher levels in the area of 6, let's say, with the average price at 6. But this is for those who trade mid-term, let's say. For daily traders, of course, you just need to catch the wave, and that would be the advice here. So first two levels to enter according to technical analysis. Third one is just risk mitigation with respect to possible negative, let's say, catalyst. And then asking how to buy, because we buy according to non-linear average down. It's still very classical, so no extra risks foreseen here. This means that you can buy with five portions trade, meaning the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. If needed, you buy slowly through the second channel with 2 portions, and last 2 portions you keep just in case if negative catalysts kick in. Then you can buy again, and while others will be taking losses, as I said, you will be just in the position with the profit and quite safe in that sense. The reason we advise it like this, because we think it's better to spend a little bit more time but still exit with profit. So that's the strategy, that's the philosophy of trading. It's part of our so-called mixed analysis, where we do implement 3 pillars. It's a technical analysis, it's non-linear averaging down based on support resist levels, and it's mitigation of foreseeing to mitigate possible risks due to negativity, due to negative catalysts that might kick in. Usually they are not taken into account by purely technical traders, and these are kind of the reasons to lose money if you are just technically trading the stock. So with this being said, that's all for Limelight Networks. Good luck with it. Also, please don't forget to subscribe to our channel if you're first time watching this video. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.